economy's slowing down, and it's going to be relatively slow for this quarter and next quarter. But the markets priced this in last year, which people can't get their heads around. They're like, we want our recession and we want our crash. Doesn't really work that way because we had it last year. You know, in crypto markets, we were down 80% last year. People have kind of forgotten that. So what the markets are doing is forward-looking. So they're looking forward at where the forward-looking indicators are showing that growth will return, but inflation will continue to fall. Unemployment will rise a bit. So that's a kind of more Goldilocks scenario with economic growth coming back without inflation. So that's what markets have been pricing. That's why, you know, crypto's been so strong this year and stuff like the Nasdaq's been so strong this year. So I'm very optimistic generally. And I think we're in crypto spring and we'll transition to crypto summer, maybe Q1 of next year.
And I've heard you mention crypto spring on a few of your podcasts. For people that are listening that are very familiar with crypto winter, unfortunately, crypto spring might be a new term for them. How would you define crypto spring?
The crypto spring obviously comes after winter, and it's after all the terrible news comes out. And if you think of spring in terms of weather, one day it can snow, then it can rain, then it could be sunny, then it could be warm, then it could be cold again. It's kind of a weird time. But over spring, generally the weather gets better. And that's what we see in crypto. So you get still bad news stories, but the market doesn't trade as badly around them. It tends to go up over time, but it's a bit frustrating because it trades sideways for long periods of time, and then suddenly it goes up in 2 days and then goes sideways and then corrects again, that kind of thing. And that's the environment we've been in. But if you actually step away, if I look at my screen now, Bitcoin's up 72%, ETH's up 45%, and Solana's up 140%. So actually, it's been a good year. It just hasn't felt that way yet. If you think of crypto as an economy, it needs money coming into the economy, right? Because it can't just be us retail lot, because we've all got our money in the economy. It needs to get new money. So that's why it's part of this global liquidity cycle. So when people get liquidity, they start investing in riskier assets like crypto, and it starts flowing in. So that adds liquidity to the market overall, which means that new projects get more traction, and you know, it filters through the whole ecosystem. So money, like in any economy, this digital economy needs capital coming in. So that's what the institutions bring, but the institutions are also building on top of this. You know, everybody from Fidelity to Franklin Templeton to, I think it's Apollo. Somebody else announced today that I think it's UBS are building a mutual fund on Ethereum, tokenizing it. So what they're going to bring is use cases. And the finance system is the largest use case of all because it's vast. So that's another thing. Also, the institutions tend to invest in VC, so they're funding the new wave of projects. So if we think about it, about 62 billion went into VC investments in 2020 and 2021 and 2022, or 2020, 2021. That money got put to work by thousands of entrepreneurs who are building new applications, new opportunities. And that's what the space needs as well, because we've got this great technology, but technology is not enough. It needs to get to user level. You know, what applications can we use where we don't even see that we're using crypto? So that's why institutions are really important. Also, it's important because things like ETFs allow investment advisors to allocate people's money. So it's not just like Goldman Sachs putting money in. It's actually all of our money, our savings and investments and that kind of thing. So it allows people to participate in this in ways that they couldn't participate before because it was harder for them via investment advisors or financial advisors to actually access tokens. But this, when it's an ETF, they turn it into an equity, essentially.
BTC nears $28,000. The crypto market took a positive turn on Saturday with Bitcoin edging closer to the $28,000 mark. This upward movement reflects growing investor interest in the crypto segment. Investors are feeling optimistic about the future of the market, leading to gains in major cryptocurrencies. On Friday, October 6, digital currencies saw a dip due to strong U.S. job data, which hinted at the Federal Reserve's potential hawkish stance. However, the market quickly rebounded as confidence returned. Bitcoin's price reached $27,941.42, up 1.43% in the last 24 hours, with a trading volume of $13.48 billion. Its market cap also increased to $545.03 billion. Ethereum rose by 1.26% to $1,643.27, with its market cap at $197.57 billion. Solana surged by 2.97% to reach $23.90, with a trading volume of $408.08 million. In the meme coin category, Dogecoin gained 0.97%, reaching $0 and 6,165 cents, and Shiba Inu advanced by the same percentage to hit $0 and 7,257 cents. The global crypto market cap increased to $1.09 trillion, up 1.09%, with a trading volume of $26.5 billion. Steven Schoenfeld, former head of international equity product strategy at Barclays Global Investors, now BlackRock, expects the U.S. Securities and Exchange Commission, SEC, to approve all spot Bitcoin exchange-traded fund, ETF, applications in 3 to 6 months. He also anticipates that the greenlighting of spot Bitcoin and Ethereum ETFs has the potential to inject between $150 billion and $200 billion of capital into these investment products. Tesla and SpaceX CEO Elon Musk believes that fiat currency is a scam that is so normalized that we don't even realize that it's a scam. Many people share a similar view, including Rich Dad Poor Dad author Robert Kiyosaki, who has frequently cautioned against investing in the US dollar and other fiat currencies, which he labels fake money. Jeffrey Sachs, an American economist and best-selling author, has stated that the end of the dollar's hegemony is near and that central bank digital currencies, CBDCs, will become the basis of cross-border settlements. For Sachs, the abuse of the US dollar as a geopolitical weapon is one of the factors that will contribute to its demise in the coming decade. Let's continue our enlightening discussion with Raoul.
I speak to a lot of the institutions, both directly with my work at Real Vision, but also with my asset management company, Exponential Age Asset Management. And we found that it's the latter, that everybody has pretty much done the homework. The pioneers just keep working through the bear market. Again, Fidelity, Franklin Templeton, a whole bunch of these guys. Texas Teachers Retirement System, they've been involved all the way through. Most other people have done the work. So actually what they need is liquidity and price. So there's not much liquidity around now that we talked about before. So if nobody's got much money, then it's difficult to invest money. But as the stock market start getting closer to all-time highs, people start making money. Let's say that eventually the Fed cut rates. Well, then money starts coming into these kind of assets. So I think most people have done the work on it now. They understand it. And so I think we will see a lot of participation from institutions in this cycle, much more than last cycle. There was quite a lot last cycle, quite a lot. But it was a lot of family offices last cycle. This cycle, I think we'll see a lot of the pensions, endowments, stuff like that. Okay, I like the team at Van Eck. I know them really well. Jan Van Eck is a friend of mine. Their heart is in the right place. They understand what this whole system is about. And really what they're saying is we understand that a futures ETF has less impact on the ecosystem than actual spot Ethereum ETF. So therefore, we just want to give something back to the spot market, because don't forget, if people are actually buying Ethereum and they were staking it and doing all of this stuff in spot, you've got much more impact in the space. Because futures, yes, the arbitrageurs will try and keep the price in line. So it does create demand for actual Ethereum, but not necessarily as much demand because people can just trade the futures themselves. So I think the Van Eck team are really trying to do the right thing. And listen, it's bigger than all of us, and we need to allow others to participate and help shape it. If people want their bags to go up, well, they want the institutions to build in this space too. If you want Ethereum to be worth $5 trillion, well, then you're going to need the finance system to use Ethereum for settlements and smart contracts and everything else to get there. So yeah, it's a good thing.
And it also helps with the build during a bear market mantra that we run by as well, with that little bit of extra backing. Okay, interesting. Thank you for that one.
Also, the other thing about Van Eck is they even have a hedge fund that just solely invests in crypto assets.
Okay.
So they're really in this space. I mean, they're properly in this space. They've got NFTs, they do everything. So they're really trying to put their best foot forward in the space and be good stewards of the space as well.
That wraps up today's crypto news highlights. Stay tuned for more updates, insights, and analysis from the world of cryptocurrencies. Please share your thoughts in the comments below. Don't forget to like this video and subscribe to our channel for more engaging content.